It's nice having you, Mr. Popoola, the CEO of Nigerian Exchange Group on Arise News. We appreciate this interview, the first in the new year. And where we finished off last year was all about intra-Africa integration when it comes to the financial markets, the securities exchanges and the rest. What do you think the central objective should be?
Okay, thank you very much. I think first and foremost, and it's good to see you again as well.
Thank you so much. Thank you.
The reality is, this subject of African integration has been spoken about, particularly first from a trade perspective. I'm a trader in Nigeria, I trade in Accra, I trade in Rwanda, I trade in Nairobi. How do you help ensure that FX flows, as an example, is efficient rather than naira to dollars to CDs, as an example? So that's the lens through which a lot of the integration discussions have been happening. But the reality also is that when you go back to capital markets, where you can actually think that perhaps through capital markets as a vehicle, the integration can happen faster. And so then you have to think through the integration of the capital markets themselves. And this integration is everything from whether the ability to trade amongst each other, but more importantly, the ability to just exchange technology, the ability to exchange know-how, the ability to exchange even things like your rules that govern your markets.
Best practices.
Absolutely, best practices. And when you think through, and as I'm sure we'll speak shortly, if an exchange is starting from scratch, how do you make sure that those rules also are in line with other African exchanges so that when you get to real integration, dual listing discussions, things then, are sort of upstream a lot easier. So I think the subject is still very firmly on the table, but I think what is changing increasingly, especially also because of the nature of exchanges today and market infrastructures, is the hows of that integration, which is now more technology-driven, like I said, and a few other nuances.
Why is regional integration and partnerships important for an Africa with 54 countries, the largest regions in the world in terms of economic bloc? And we're talking about 30, 35 exchanges, all of you under RCM and some of you under IOSCO membership as well, such as the Nigerian Exchange Group. Why are these integration and partnerships and collaboration important, in particular for young emerging exchanges on the continent?
Thank you. Very good question. I think a few reasons. One, first and foremost, if you look at even just the corporates in many of these countries, it is the norm, it is not unusual, it's the norm that each of these corporates are doing businesses across all of those countries, whether it's Nigerian banks and their presence across the continent, whether there's industrials like Dangote with presence across the continent, Ethiopian Airlines, presence across the continent, MTN. So you're seeing this
tourism, hospitality, hotels.
So just that lens alone tells you that the capital markets naturally has to follow through, because then you are going with your customers, your corporate. These are listed corporates in an exchange. They need to raise capital here and there. And so this integration, naturally, you can think how that is a benefit. Number two, I think if you look across the continent, obviously, if you go all the way back, a lot of these lines that have been drawn to say we're 54 countries now really weren't there before. And at some point, you have to think through whether scale, right, whether it's a regional block level or en masse across the continent is a good thing. And we think that the answer to that is yes. The problems for Africa have to be solved by Africa. And so the more we can all come together, where different markets have different strengths. Those strengths could be there structurally. Those strengths could be there just historically. Those strengths could be there just as a result of natural, sort of resource and know-how. How do you bring all of those strengths together to cover for the potential weaknesses of others? And then some other times also, many other countries are nascent, just starting to evolve. Be able to shape them to the discussion we had earlier. Then I think ultimately all of that creates some good.
Would you like to see beyond trading? Would you like to see cross-border listings, for example, within Africa? Like to see a bit of that happens in East Africa, by the way, between Uganda, Kenya, Tanzania stock exchanges. Would you like to see more of that perhaps in West Africa and the rest of the continent?
I think so. Yes, indeed.
Even from the primary market?
Yes, absolutely. You see, part of the reason for that is we go back to capital markets. Ultimately, there are two major people you bring together in a market exchange. Providers of capital and people who desire and demand capital. Now, the reality is, if you look at either of those, sort of classes, that supply as an example of deals for the capital markets. The reason and the benefit for integrated market is because sometimes there's a dearth in supply in a certain market. You're having macroeconomic challenges. There just is no listings there, for example. There's no desire and demand for capital. Well, does that mean that there should be no supply of capital to the market? The country next door, the country in other parts might have a different kind of challenge, right? You look at also on the side of, capital supply. Same sort of nuances. There's some kind of capital that would only be unlocked when there are opportunities that are not necessarily local. That's the reality. So if I'm today, sitting in some countries on the continent and looking for exposure to tech on the continent, the reality is that exposure will not come from my country. So this whole idea to cross-fertilize ideas, and then back to the basics, the reality also is that, flow begets flow, as we say in the industry. And so the more deals you can bring, from different sides of the continent and the region, it translates to increased flows. Then ultimately the capital market is able to do what it was set up to do, which is to help finance economic growth, to create wealth, and things of that nature. Now, when we can get that done right, then you open the door for a lot more foreign international capital that tends to be a bit more sustainable. The final bit I'll add to that is back to the subject of foreign capital. One of the reasons why you don't see a lot of foreign capital is the absence of scale. So a foreign investor shows up and says, look, I'm looking for decent-sized tickets to write, whether that is on the strategic side or whether that is more on the portfolio investment side of things. So the more this integration happens, the more skill that there is, and then the more you can open some of these doors.
It is very interesting, and we follow you everywhere you go. And it looks like your first major assignment in the new year was not even in Nigeria, was in Ethiopia, quite a few days ago. What did you see on the ground as far as Ethiopia, so bringing back the stock exchange after 50 years of hiatus? What did you see on the ground there in Ethiopia? What went into it from the side of the NGX and a few of your colleagues on the continent that supported this country to hoist the flag of an exchange once again?
Thank you. So I was very, very impressed with what I saw in Ethiopia. We had, at least a couple of trips there prior. But it's always good to go somewhere and then come back maybe in a year and see the spate of growth that is happening.
Progress.
And Ethiopia is one such example. There's very strong leadership from the center, a very big desire and interest to innovate, to
on the political side,
the economy on the political side. Naturally, that filters through everything. So, for example, you're aware they had economic reforms. The foreign exchange now has been liberalized. The stock exchange, capital markets now has been set up. And when you look across the continent, back to some of the themes that we were discussing, how many countries can you find 120 million people that are growing, that desire and demand, basic things? It's what led us, the NGX, to make the investment into the Ethiopian Stock Exchange. So we are strategic investors there. But it's more than financial. We're bringing to the table everything from technical know-how, expertise, potential transfer of technology, exchange of market rules and market structure, as an example. And, if you look at the fact that there are several corporates across both jurisdictions doing business in each other, ultimately, perhaps, there are financial products that you could set up to, derivatives as an example, to solve problems for these corporates. So I think that the potential for, scaling there is quite material. And this idea of an East-West partnership, I think is quite exciting and encouraging for us. So being there, I saw a country where, there's a lot of hunger to reform. And not just reform, actually to put policy in place. The exchange now was maybe just under 3 years, essentially start to finish, from the decree, right from the very top, to ask that an exchange be set up. And one of the beauties that I saw with what they have done is that the exchange now is almost a one-stop shop. When you look at many exchanges, you might see an exchange that's more equity heavy, and another that's fixed income heavy, and another that's maybe alternative assets and digital assets. they're pretty much starting everything together in one house. Money markets, bonds, FX,
OTC,
equities, OTC as well. So if the execution is done well, I do think that there could be remarkable progress from there. The other bit I should add is just the presence of DFIs there. FSD Africa, for example, took a very strong leadership in setting up the exchange. Lots of the people driving policy there from a World Bank, IFC, sorts of people. So certainly a very encouraging trip. It's an investment that we're very happy with. And again, besides the financial returns, potentially we can then bring some value to the table, having been in the exchange business for quite a while.
What's the size of the NGX investment in the ESX Ethiopia?
Okay, well, so that one, I'm not sure it's something I want to throw out there right now. Let me be a bit cautious on that. What I would say, though, is that we're one of 2 foreign investors. At least that is public information. And we're enough to be called a strategic investor in the exchange. And it's not just financial, like I said. We're working with them across every aspect of the work that they're doing there.
Do you think there should be more of such strategic investments across exchanges on the African continent? Do you think that will even deepen the whole inter-African exchange linkage project much faster and deeper?
Well, certainly there's a need for a lot more, call it collaboration handshake. There's several ways to do that, not necessarily buying a stake in the exchange. As you would know, many countries also have some limits and some, call it barriers that they put around key market infrastructure. One of the reasons we're very pleased with Ethiopia, right, is precisely that. It's just an openness to liberalize, to open up the economy. So the answer to your question is yes. I guess the how, I would say that there's several other levers that one could use. You have some things like the ASEA, on the sort of Pan-Africa-wide policy advocacy together, speaking with one voice, research together because the challenges and the problems are similar, adopting nuances and know-how from each market. I think there are pockets like that you can integrate through. Then all the way to things like dual listings. You get more intentionality around these things. I think you can drive remarkable progress.
A number of your companies on the NGX in Nigeria are going global and intra-African, from the banks to the industrial cement and others. Is the NGX itself looking to go a whole lot more Pan-African moving forward?
So there's only so much of our strategy I can speak to here, but I think this stake in Ethiopia should be a very good example. You would have seen also late last year, the board of the exchange with the regulator took this trip to Mumbai, to India. We spent very good time with the leadership and government there and many of the ecosystem players there in India. We spent time in South Africa as well. So I think that starts to give you a sense as to how we are thinking about our business. Obviously it has to be
going global.
It has to go global.
Going much global.
Absolutely.
Okay, we'll look forward to what your outlook for 2025 would be, and I'm sure in the next few days you will be addressing that for the entire marketplace. There will be further disclosure on that. But what will be the key peg for that? Just to summarize this.
Okay, so I think that our view is that we're now at that inflection point. When you look from a macro perspective, we expect to see now that a lot of the economic reforms start to increasingly yield fruit. We expect that we can build on what was very strong momentum last year. That momentum was driven, of course, by the banking sector recapitalization. We were able to also take advantage of that and innovate. We brought to market some technology solutions. You'd have seen that many of those primary market issuances, retail investors were able to invest relatively easily, whether through access that we gave as NGX, or whether that was because we had APIs with the banks. They just allowed you on your mobile device, in your banking application, to buy those primary issuances. You put all that together, it brought quite a good number of new investors on the retail side to the market, sort of revived again the capital markets. And we expect that momentum will follow us into this year. So whether it's because they follow through issuances by banks and issuers, whether that's because perhaps some other sectors might also talk around capital, which drives people to the capital markets, or just because, like I said, on the macro side of things, we expect to see things improve. And then finally, when you look around what I call perhaps just social changes around us, let's talk about Nigerians in diaspora coming back home. We think that this is a trend that is here to stay now. We saw this in December with many, Nigerians in diaspora coming back. We're asking ourselves, how does the capital market take advantage of this increasing desire and demand by Nigerians?
I'm sure you're thinking about a fund or something.
Well, we're thinking about something. And some things.
I'm sure you're thinking about some things, looking at what the financial regulator is doing. And I'm sure the capital market can do even much bigger size of things to get the diaspora investment into this market, increase the number of Nigerians that are participating in stock market investment.
Absolutely. I mean, if you look at the fact that, historically, what does the average Nigerian do when you're abroad, you want exposure back home? It's typically real estate people think about.
Yeah.
And that real estate is hard asset real estate. And we all know what can go wrong in that sort of path. If you look now what is happening, I think the CBN now has allowed Nigerians to have certain kinds of accounts.
Yeah.
And for us, that was a precursor, as it were. So once you have that, solved, then access to financial markets back home with the right level of intentionality, with the right products, you can start to, sort of...
So once that financial flows through opening of bank accounts or whatever comes in, you can put products in the hands of those diasporas.
You can, and you can use technology to do that very easily. Yes, as I said, it plugs into this, what we're seeing increasingly as a social nuance. 2018, you had, the homecoming out of Accra, and from 2018 to 24 now, what we saw in Lagos, it's becoming a thing now. And I think the right forward-looking institution has to think through how you can take advantage of that. Because when you look at just the size of our market today, the count also of our markets, this can really move the needle if done properly.
Maybe a dollar-denominated something will sound very sweet to the diasporans.
I'm sure my colleagues in the exchange
products and all that. We'll be able to speak to them. We look forward to what will come up, but we can tap this $30 billion into this building.
Absolutely.
Congratulations. And welcome back from Ethiopia.
Always a pleasure. Thank you very much.
That's a very beautiful country, isn't it? I'm sure you liked it.
Very nice place. Warm people, good food, lots of history. You're aware Ethiopia is the only country that's never been colonized, the continent.
In Africa, yes.
Very rich history, rich culture, and just a lot of raw energy there. Now, without its challenges, I should say.
Definitely.
But certainly it's making progress.
I think Ethiopia authorities just made the rest of us on the financial markets proud that within 3 years they can onboard a new exchange and get it up and running.
And one that they're very, very serious about. The Prime Minister said he would make sure the state-owned entities that come there. The head of the Ethiopian Investment Holding Company said the same. Ethiopian Telecom now has started this public offer, sort of process. And I think the other bit also that was quite encouraging to us before we made the investment was, in the absence of a formal exchange, many of the shares of the banks, for example, already are crossing hands.
Under the ODTC.
That has 105,000 shareholders in Ethiopia. Wow. And they've been crossing shares, right? Sort of back end, back door, Excel, find someone to settle. So all of that rumbling, as it were, for a market has been there. And, the bet is...
And that's when you sniffed an opportunity in Ethiopia. 120 million people, you can't let go.
Thank you very much.
We've got to be part of it. Thank you so much. Congratulations.